Today, I'll be going over 3 dividend growth stocks that I think every teenager should own. And this video isn't just for teenagers. These are 3 dividend growth stocks I think everybody should own regardless of your age. I recently just hit my anniversary for my 3rd year of investing in dividend stock, and I'm starting to develop a really strong understanding of what stocks work and what stocks won't. So today, I'll be giving you my 3 stocks, an overview of them, and 5 things that I wish I knew when I started investing, and the 5 things that I've learned over the last 3 years of investing in dividend growth stock. And if you appreciate me sharing some wisdom, it would really mean a lot if you could subscribe and help out a small-time YouTuber. Right now, my watch hours are dropping faster than Silicon Valley Bank, so it really would mean a lot. With all that said, smash the like button, subscribe, and of course, roll the intro.
Hello, I like money.
The first stock will come as a shock to all of you, but it's a Microsoft stock, ticker MSFT. Right now, Microsoft is probably my favorite company in the world and the favorite stock that I own in my portfolio at the moment. It's also the highest position in my portfolio by portfolio weight. Currently, I own roughly $1,600 worth of Microsoft, and it's one of those companies that I'm completely fine paying a premium for. With that said, they've bottomed out at around $225, and I was lucky enough to buy a share a month ago at $230. Since then, they've climbed up back by $50. Currently, Microsoft is trading at a 29.5 PE ratio, which for a company as high quality as Microsoft, I consider that fair value. A year ago, I was buying Microsoft at $285, and I'm continuing to buy today. Over the last 1 year, it's down just 5.35%. Currently, Microsoft's dividend yield is 0.98%. And while Microsoft may have a micro dividend, that dividend growth is nothing but micro. Right now, as I'm really young, as I'm a teen myself, I'm looking for a lot of dividend growth because it's shown that over time, companies with lower dividend yields and higher dividend growth will compound your wealth on the stock faster than higher dividend yields and low dividend growth. And with a company like Microsoft, I want that money to start compounding as fast as possible, and that's why I advocate for all teens to at least look into this stock. They have a 1-year dividend growth rate of 10.17%, a 3-year dividend growth rate of 10.25%, a 5-year dividend CAGR of 9.92%, and a 10-year dividend CAGR of 11.7%. And Microsoft has so much more assets than they've had in the last 10 years right now, which leads me to believe that I think Microsoft will be continuing growing their dividend even larger than they have in the past in the future. I'm looking for Microsoft's dividend hikes to be from 10 to 20%. Microsoft has monopolistic qualities in all assets of their business and business segments, whether it's their gaming empire that they're building right now with Activision Blizzard, their software business, Azure, or cloud computing. Microsoft will be around for the next 100 years at least, in my opinion. So if you're a teenager like me, why not invest in Microsoft now and let your wealth compound over time? Your compounded shares on this stock will be insane if you buy and hold for the long term. And if you thought Microsoft's dividend growth was good, wait till you look at this next stock, which is Visa, stock ticker V. Visa, like Microsoft, is one of my favorite companies that I own in my portfolio right now, and it's a company that I've been looking to add to for a long time. Currently, Visa is trading at $217.39. Their 52-week high is $250, and their 52-week low is $174. Over the last year, Visa is up a little bit, 1.85%, and they're currently trading at a forward PE ratio of 25.66. Just like Microsoft, Visa does not have the highest dividend yield right now at 0.83%, but wait till you see the dividend growth. The only thing really bad about Visa stock right now is the valuation. A lot of investors will say that this stock is expensive, and my response to that, when you have an expensive stock that's also a very high quality stock like Visa, it's best just to dollar cost average into it. Because with a high quality company and a dividend growth machine like Visa, you don't want to be on the sidelines and let the potential CAGR slow down. Of all the 3 stocks that I showed you guys today, Visa will be the one with the highest dividend growth rates. If you would have invested in Visa 10 years ago, your yield on cost would be insane because of the dividend growth hikes that they've had over the years. And currently, Visa's payout ratio is 20.94%, so they have plenty of room to grow that dividend in the future. Visa's been growing their dividend for the last 14 years. And now let's actually take a look at Visa's dividend growth, and it will shock you. Currently, Visa has a 1-year dividend growth rate of 18.71%, a 3-year dividend growth rate of 14.47%, a 5-year dividend growth rate of 17.55%, and an insane 10-year dividend growth rate of 19.62%. Imagine your paycheck from your job and you're getting a 15% raise every year. Well, that's the life of a Visa shareholder right now. Currently, their business is just printing money. And as I mentioned earlier, the only thing bad really about the stock right now is the valuation, and you are going to have to pay a premium for this awesome dividend growth here. Like Microsoft, Visa has monopolistic features as well. They run a duopoly right now with MasterCard. Right now, those are the two big credit card companies and the two big dogs. But the real money from Visa comes from the digital processing. You can look at here with this crazy profit margins, 97.58. When you're young, you want companies like this, companies with crazy growth like this, and will continue to reward you as a shareholder over the long period of time. So if you're young, get in now. And for our last stock, it is very important for every investor, no matter what age you are, to have good diversification in your portfolio. So the last stock is SCHD that I chose, which is a dividend ETF. Big thing to keep in mind for ETFs is what is an expense ratio. If you're a seasoned investor, you know what this is, but if you're newer and you're a teenager, an expense ratio is basically the fee that these companies will charge you. SCHDs is really good at 0.06% right now, but if you got a company like ARK, or an ETF from ARK, it's very bad. And you're going to be losing a lot of your overall return on just fees. So for every $10,000 you basically have an SCHD, they're only taking away $6, which is really good. Over the last year, SCHD is down 10.28%, which compared to the S&P 500 is outperforming. And they've been down recently this week because of the bank's collapse, so now might be a good time to pick up some SCHD. Since a good amount of their portfolio and holdings are in financials, a lot of investors are scared of that. Short-term investors, mind you, are scared of that, but I think long-term investors, you should easily realize it's just a short-term issue, and it should not affect SCHD really whatsoever. SCHD also is a really good, solid dividend yield and a very solid growing dividend for a dividend ETF. Currently, they're trading at a dividend yield of 3.58%, a dividend growth rate of 13.9%, a 5-year dividend growth rate of 13.74%, and a 10-year dividend growth rate of 12.2%, which again is very solid for a stock. And for a dividend ETF, it's very impressive. SCHD provides better total returns than a regular S&P 500 index for the last 10 years as well. And I think it's definitely something that you should definitely look into if you're a dividend investor. Now, on to the 5 things that I've learned in my 3 years of investing so far. 1. Invest in what you already know. When you're starting to research and look at stocks, look at things that you already use or go to in real life. For example, you might go to Starbucks, so you might want to research Starbucks coffee. You go to Target every other week, so you might want to research Target stock. You have Nike shoes, you might want to look into Nike stock, so on and so on. This was a great way that I really introduced myself to a lot of the core positions that I own right now in my portfolio. Also, try to realize trends in like society. So you know, you see the Starbucks on your corners always packed. You see a lot of people, you know, wear Nike shoes. You get my point. 2, don't waste your time with just okay or good quality companies. You want the best of the best. You want great quality companies in your portfolio. Right now, I have roughly, 7 or 10 stocks right now that I want to sell out of right now. These are stocks that I bought into early in my investing journey, or even recently, that aren't the best of the best quality companies that I would buy right now with my capital. These companies right now, I wish I could just sell out of, but if I were to, I'd be selling out at huge losses. So do not waste your time with just okay quality companies. 3, don't take any stock advice from family or friends. I made this mistake with it. My dad recommended me VF Corp, and VF Corp just cut their dividend. 4, do dividend investing because you'll become addicted very fast. When you get dividends from companies, you get addicted to it. When you're addicted to something, you want to continuously learn more about it, which I think is an amazing thing when you want to invest. When you're a teen, I understand it. There's peer pressure. You want to go out. You want to party every Saturday. But when you invest and you get addicted to this, I promise partying is not very appealing. You just straight up develop a different mindset than other kids my age. And my last piece of advice is to try to make an effort to make yourself more known in the investing community. Join Discord servers just like mine, link in the description. Make a Twitter account. Be more active in YouTube comments. Ask questions, etc. I've learned so much from other people in the investing community, and I'm so grateful for all I've learned. But with that said, join the Discord if you want to get a head start on that. The link's in the description. That, my friends, is going to be the end of the video. I really appreciate it if you made it this far. It really does mean a lot. But as I've mentioned already like 3 times in the video, if you do want to meet new investors, like-minded investors, bounce ideas off each other, join the Discord, the link in the description, 100% free, no stupid course or whatever. If you're not already, show me a sign of your appreciation for making this video. It took a decent amount of time to make, actually, believe it or not. Help me reach my goal of 1,000 subscribers by subscribing. Smash the like button. Join Join the Discord, link in the description. Thank you. And of course, oh wait, I forgot one last rule. Do dividend stocks, not drugs. Have a great one.